17th episode of the Techbiz webinar. It's so exciting to be here today, and it's truly an honor to kickstart today's conversation. It's an honor to kickstart today's conversation. I'm excited. My name is Antonia Anyau, and I serve as the Programs and Learning Officer at Eko Innovation Centre. And before we start, first off, a special shout out to the visionary, the juggernaut, Mr. Victor Gbenga for Labi, as we love to call him VA, who is the founder of the Startup Hub of Africa. Yes, that is Eko Innovation Centre. Thank you so much, sir, for this incredible platform and this opportunity. So before we dive into today's session, a quick background for those joining us for the first time. Firstly, welcome. We're thrilled to have you here. The Techbiz webinar is designed to foster innovation, entrepreneurship, and the growth of the startup ecosystem. Every month, we invite seasoned experts to share their insights and offer practical, hands-on guidance to help entrepreneurs navigate their journey. It's all about actionable insights that drives real results. Beyond webinars, we have the Techbiz community, which is a platform for networking, collaborating, and showcasing your genius. Well, last month, we're privileged to have the pilot to this year's Techbiz series, and we're joined by the remarkable Mark Igbinedion, who is the founder of Distinct.ai, and he shared with us some invaluable insights on navigating startup chaos. Today, we're building on that momentum, we're soaring high with a crucial conversation on global expansion, preparing for startup for the international market. And I'm so excited. Drum rolls. Well, some of you have seen our publications online on our special guest for today. I like to call him our very own Nigerian superstar, the person of Opeyemi Awoyemi. It's such an honor to have you on call today. We're excited. We're looking forward to hearing you speak because you are a living epistle to our conversation today. And before I'll be passing the baton over to Opeyemi, I just want to thank our audience once more for joining in to today's conversation. You can share the link if you're watching from YouTube, if you're watching from Facebook, kindly share the link to your friends. Today's conversation is going to be so insightful and very beneficial to everyone on call. So without further ado, I will be reading the bio of our speaker today. As you well know, we love giving honor to whom honor is due. And Mr. Opeyemi is a serial tech entrepreneur. He is an investor, currently the general partner at Fast Forward, an impact venture studio and early stage fund driving prosperity in Africa through technology. He is the chief evangelist at Hello.cv, an AI-powered CV builder. And just recently, I think it was 2 days back, I saw some of the updates that the platform could do. Congratulations to you, Opeyemi. So continuing to read his bio, Opeyemi previously co-founded Jobberman in 2010, scaling it into Africa's largest online recruitment platform before its acquisition by ROAM, where he led the jobs division across 5 countries. He also founded WooGo Host, Nigerian's top cloud hosting service, which he successfully exited to Host Africa. Opeyemi later worked at Indeed as a senior technical product manager, leading job seekers, APIs, and gigs teams. Through Fast Forward and angel investment, he has backed 50 plus companies across Africa, the US, and Europe, including Old School, Doja, Pesa, Boompa, Reliance Health, and Leeds United FC, with exits in Clearbit to HubSpot, Laxic to X, and Electronics Settlements Limited. He holds a bachelor's degree in computer science and engineering from the prestigious Obafemi Awolowo University and an MBA in progress from Walton. an MIT Legatum Foundry Fellow. He brings expertise in technology, innovation, product development, growth marketing, and UX design. Opeyemi advises and invests in startups across e-commerce, fintech, and new media. Ladies and gentlemen, I present to you the remarkable Opeyemi. Opeyemi, it's such a pleasure to have you on call today.
Thank you very much for having me. I appreciate it.
Thank you. Such a pleasure to have you. And we're looking forward to the insights that you would share with us. Again, you're all what Techbiz stands about, bringing experts that are not just speaking about the topic, but are sharing insights, practical insights from what they have put to work and has produced results. So we're so glad to have you on call today, telling us how our startup ecosystem can really reach for global dominance and global impact. And that's the importance of today's topic, really, as we continue to see technology breaking down geographical barriers, and the ability to scale beyond local borders is no longer a luxury, but really a necessity at this time. And for startups in the tech ecosystem, expanding internationally really opens up new revenue streams, diverse user bases, and access to global innovation networks. Um, I know we're all excited. I want to hear Opeyemi speak, so I'm going to passing the mic over to Opeyemi, who is going to take us through today's topic. Thank you once more, Opeyemi. Thank you. Over to you.
Yes. Good day, everyone. Thanks for having me. It's a pleasure to be here today to share with you guys. I'm going to keep it short. I'll do a bit of talking about my story in my presentation, as well as sharing my experiences on preparing your company or your startup for global markets. So a bit more about me. I think my profile itself, it's been read, but then it's just the story is not complete without me mentioning it again. And I say it with a lot of humility. The fact that I've built two companies that are #1 companies in their spaces back then and still till now. So Jobberman is still the largest job site in Nigeria today, and Whogohost, now known as Go54, is the largest domain registrar and web hosting company in Nigeria today, which I both founded. And in 2019, I looked at everything I've done and I felt, hey, maybe I needed to do something new, something on a global scale. That was a personal ambition. And I decided to move to the US in 2019, long before Japa was cool. My story, understandably, because of the things I've done, is kind of different on how the move happened. But that's story for another day. Anyways, I moved to the US in 2019 and I kept on shuttling between the US and Nigeria, thinking about both building for Africa and building for US. And today, I manage Fast Forward Venture Studio Fund, which invests both in companies in Africa, Old School, Bumper, Doja, Pesa. Those are some of the names that some of us might know that we've backed from day zero. And I'm also co-building one myself in Elo.tv, which is a global company, by the way, that has like very little revenues from Nigeria, if almost nothing, like almost no revenues from Nigeria, and 99% of the revenues outside of Nigeria. And what I'll be sharing more is my lessons from building a company, from what I've seen back in companies, and for my thoughts on the future and the way forward for Nigerian entrepreneurs who are looking to build global companies. So this is something that's kind of ageless. I put this on my Twitter handle on the 15th of February, 2024. and it's still the pinned tweets even till date. I'll read it out very quickly. The idea that an African tech entrepreneur must build a startup for Africa is severely limiting and an effect of long-term conditioning. Building for the world is a valid alternative, and if that is what you want to do, go for it. This tweet has taken a different form of its own, life of its own rather, aside from the fact that it's been retweeted a lot of times, viewed thousands of times. It's also been reposted in different formats by different publications, crediting me, of course, and it's sparked a lot of conversations on LinkedIn, on Reddit forums, on Twitter, and even in WhatsApp groups, right? Around what should an African founder do? Should they build for Africa? Should they build for the world? You know, and there's always a lot of dissenting opinions. But one thing I want to quickly point out very quickly is the tweet itself is very instructive if read very well. Building for the world is a valid alternative. Essentially, it's an alternative. There is no one way to think about innovation. There's innovation that needs to be local, and there's innovation that also needs to be global. And a Nigerian and an African has a right to decide which, based on their skill sets, their focus, their own personal ambitions, and their life mission. And also in terms of seeing the problems at hand. So it's neither this nor that. Every alternative matters. So what I'm sharing today is going to be about those who want to expand globally or those who want to start global startups from day zero. Has nothing to do with whether it's better than building a local company. It's also not lost on me that during this period when I made that move to go to the US, we had huge growth in the fintech ecosystem. And there were moments when I felt like, oh, why did I leave? Why wasn't I in the middle of all this action? You know, companies like MoneyPoint, Flutterwave, Paystack achieved their highs, right, during those periods. Okay, so why build for the world? Number one is a bigger market, right? And we're talking not 200 million people here. We're talking 6 billion people. We're talking cities, right, that their GDPs are bigger than Nigeria's GDP. We're talking of cities where specific industries are itself even bigger than Nigeria's GDP, or where specific industries that will not exist in Nigeria today or has very little funding in Nigeria today, right, has a lot of funding. So think government spending, think education, think healthcare, think software as a service, think manufacturing, think climate. There's just so many industries out there, right? Where you can see companies making billions of dollars, right? It's not lost on me that like our biggest company in Nigeria, some of our biggest companies in Nigeria, revenue for say 2023, 2024 is around EBITDA rather is around $300 million, right? Profit. That is a small, tiny profit compared to say companies in Austin, Texas, not Dallas, Texas, just Austin, a small city, capital city, which is smaller than Dallas, smaller than Houston, even in the same Texas. Talk less of the whole of US, or talk less of Canada, which is GDP, 7 GDP in the world, or UK, Europe, Asia. The world is just bigger. And I mean, that's just the reality. The other part, of course, is diverse needs. I always make a joke that if you started, let me come up with something funny. If you started a company to sell cat food for only cats that like to eat at night and not in the morning in one state in the US, you will still be a millionaire, right? I mean, if you dimension and go niche, right, so much, you could still be a millionaire. But that would be very difficult. If you have to do that in Nigeria, for example, you almost have to be like number one, like I did with Jobberman or Google Host, right? And capture a whole large market, you know, for you to even achieve anything of some moderate size, right? So those are the real challenges. So why don't we find a lot of entrepreneurs expanding globally? What are the real issues with expanding globally? The biggest one is knowledge, right? Historically, it's been difficult to build for markets that you don't know, markets that you don't understand. Most people, most founders build for problems that they experience or problems that they see around them. The question is, if you don't see it, how can you know it, right? That problem continues to exist, but then the world is changing. The world is becoming a global village, and as such, some problems are getting more homogeneous, where same problems in Nigeria is very similar to what's experienced in Nairobi, in Kenya, or in the United Arab Emirates, or in the UK, or in Poland or Sweden, or in Canada. Not all markets, not all sectors, but in some sectors, the problems are getting more homogeneous. The second piece also is software is also a liberator that kind of becomes a common denominator. Software challenges are pretty much the same in a lot of ways. And then the opportunity of online, data online, and even now improved and also made even much more visible by tools like ChatGPT makes research around what's happening in the country that you've never been before easier, and understanding the issues or the challenges of a potential user in a country. So those knowledge barriers are being broken, but historically it was difficult. The second piece is cultural differences, which is kind of very close to the knowledge. So how do you sell to somebody? If a sales method works in Nigeria, will it work in Kenya? Will you work in Slovenia or in Australia, right? Those are challenges. And an entrepreneur will feel like, oh, they won't listen to me, I'm black. Oh, they won't, how do I relate to their problems, right? And also those can be learned today, but those are like the initial challenges. Skill set gaps. While we have a lot of really great talent in Nigeria and Africa in general, skills is not just about software skills, right? There's also soft skills that can be very, very unique to markets. So how do you joke? How do you network, right? What exactly is small talk? So for example, you find a lot of people bonding in America and the UK over the sports, right? But yes, a Nigerian doesn't know much about American football. How do they bond with those who've always spent their life, watching American football, and that's what they want to talk about. They talk about skiing or talk about the weather. In Nigeria, the weather is almost the same all year round. I only know a few Nigerians who will check the weather before they leave their houses, right, in a day. But in other countries, in the UK, people will check the weather to tell whether to take their coat or take their umbrella, before they leave their houses. And same would go for, say, North America as well. So you have those different, expectations, that also kind of evolve into skill sets. So you can see a Nigerian great software engineer, but cannot sell in some markets, right? Accent is also a bit. Understanding, how to close a deal is also a bit. There's also distance challenges that also come sort of with the context of skill sets, right? So if you need to meet someone face to face to close a deal, what does that mean for you, right? Do you have visas that can help you to jump on a plane and go meet that person? And how quickly can you do that as compared to a 30-minute train ride or a 20 minutes drive? So which is why the same person in the US also can't do business easily in Lagos, and the same person in Lagos can also do business easily in London. So there's those gaps too as well, right? But thankfully the internet, I think COVID as well, during the pandemic, people got used to doing meetings and closing big deals on Zoom because they just couldn't get to see each other. That also reduced that gap, and that's why I don't have it on my slide, the distance gap. Payment solutions was also another gap, but that's been largely solved. Today, there's very little issue in ability of a Nigerian company or founder to accept payments globally. Register a company in Delaware, boom, Stripe, and you're almost good to go. So now, they say there's no presentation that is complete without, giving some frameworks. So I'll get a bit academic, then I'll come back to practicals. So this is the academic part where I give you some frameworks to think about. So talking about why expand internationally. You could want to expand internationally because you want to add volume. You just want to make more money, increase the growth of your company or market share. It could also be that you want to decrease your costs. Maybe there's low margins in your business in Nigeria, and you want to expand to a market that has higher margins, so that by the time you are produced for multiple markets, you're able to leverage economies of scale. It could also be just differentiating yourself. So for example, willingness to pay in new markets. So the same product you sell in Nigeria and companies will be complaining and they don't want to pay. For example, software. Nigerian companies hate paying for software, like hate it so much, that even when you think about fintech, people don't pay for the software, they pay for the transaction fees and things like that, right? And we use a lot of free software in Nigeria, which is very different than other markets where they will charge $10 per user, $20 per user, and you find companies, large companies, paying for 1,000 seats, something that will probably never happen, in Nigeria. Increased willingness to pay in new markets. Then also improving industry position. You see companies who expand for the purpose of, to position themselves very well, or like a Nigerian company that goes and shift their headquarters to London. My favorite example of talking about this is Olam. Some of us might not know Olam, who does a lot of exporting. Olam today, when you read about Olam online, is a Singaporean company, but Olam is a Nigerian company. A couple of expatriates started this company in Nigeria, and the business was mostly Nigeria for the better part of it. But by expanding to Singapore and positioning themselves as headquarters in Singapore, they have to position as an Asian company, get better rates from lenders who are not seeing the African risk anymore because they are an Asian company. So there's a lot of that happening. And essentially, it's the reason why also even startups, right, establish themselves in Delaware. So they can say we're an American company, but we just have operations in Nigeria or in Africa, right? So also that also goes with normalizing risk, right? When you start to look at the macros, okay, up and down in Nigeria. Today, you don't want your business to be dependent on that. I think I was cut off for a moment. Let's get back on track. Okay, I think we're back on track. So the cage framework. So cultural distance. In cultural distance, I think I talked about that earlier, the values, language, religion, social norms. Administrative distance. So the regulations work in the same way in like the environment you're familiar with, which is Nigeria, or the government policies work in the same way in which you are familiar with. So the legal systems work the same way, right? If you think about places where the way it works is totally far from the way you currently work, you might have challenges, right, in setting up. Maybe there's a way you do taxes, there's a way you move things around, and then you go to a country where it's not accepted that way, then there could be challenges. I don't think that's much of a problem for Nigerians in general, because in a lot of cases, the place where you're likely to move to probably has more favorable, policies in some ways and form, right? That you're more than happy, right, to go there. But say, for example, a British company trying to establish in Africa, they have to think about, okay, how do you handle Nigerian government? How do you do this? How do you move your efforts, which is things they are not used to. So they might care more about that. Geographic distance is also another thing to think about. So physical distance, if you, for example, in the business of goods that are moving around, what does that mean? Is there port infrastructure, even, Is it closer to the water? Is it not closer to the water? Is it more interland or less interland? There's a lot of things to think about there, especially when it comes to moving goods around. And there's also economic distance, which is the one I'm most favorite, most excited to always talk about, right? And that's probably the realest one. Can the market pay, right? The kind of people you are talking to there, do they have the same challenges? Is it a first world problem or is it a third world problem? Are you selling Ferraris or are you selling Indomie? How does that matter in your market as to willingness to pay, ability to pay? If you're a lending company, are you in markets where people are more than likely to repay money because there's credit systems that work, or they won't repay money because there's nothing you can do about that. There are no legal systems. For example, someone talks about countries where like you dare not owe money. You can imagine how that country would be a wonderful place for lending. And now, of course, the cost of capital in that kind of country would be low. So those are things to think about, right? To decide where to expand. A favorite question I like to ask Nigerian entrepreneurs is, if you think about global expansion, what country would you expand to? For the sake of time, I won't do that exercise here. But maybe I should do the exercise. If you don't mind, if you can answer in the chat, what country are you going to expand to if you want to expand today? Let's just use a few seconds. Please, everybody, if you can answer, just mention one name of one country, just one country. What country would you expand to if you're going to expand today? What's the first country you're going to expand to? I'm hoping to see some answers in the chat. I'm waiting. I'll just wait for 30 seconds. Thank you. One answer in. I would love to see from others. Okay, for sake of time, I wouldn't wait. We'll just go. Someone answered with Ghana. Thank you very much for throwing that in. Now, the answers I get all the time is, of course, Ghana, Kenya, Egypt, US, Canada, and UK, right? What you realize about those answers mostly is why in some cases is the right place for a company to expand to. In some cases, the founder just chooses the country because those are the ones they are very familiar with. And the countries I mentioned are the ones that most people are familiar with. Tanzania, that's a very good one. I've never had Tanzania in a long, long time, right? Tanzania is a very good one for a lot of reasons, especially because it's one of those countries in Africa where the exchange rate has not really shifted, maybe shifted by 5%, like 5% in the last 10 years, you know. So it's a very good one. But you rarely find African founders saying they're Nigerian founders rather saying they're going to expand to Tanzania. So which also comes to the knowledge barrier and not having like a framework like the cage distance to use to think through. We think about it from a visa's point of view, and where my last 4 friends or last 5 founders I read about in Tech Point, where they expanded to. And that's why Ghana, Kenya, UK, US, Canada are like the most popular ones, right? In some cases, we also think about it as places where Nigerians are, rather than places where my customers are, you know. But my answer to people is you do not know until you really think through where is my own market. And you might find some surprising countries, the countries you've never heard before, countries you've never been before, that are actually the best countries for you to expand to before you think about some of the countries that might currently be on your mind. And the cage framework is a useful tool to do that. So I'll move on to talking about how to expand. So people think about it in different ways. The most common way is to aggregate, meaning you're thinking about like, oh, I'm selling X in Nigeria. I want to go to Kenya or Ghana or Tanzania or wherever and just go and be selling the same X. That's one way to think about it, which is the most common way to think about it, right? Some people think about it as adaptation. So for example, you have a product you're selling in Nigeria, you say you want to sell it in the US, you're like, okay, I'm not trying to sell to Nigerians in the US. But I know this product is useful to these demographics also in the US. So I know I would have to adapt the product. A company I know that is a favorite for me here to talk about is also Isuzu. Isuzu is a company that I missed as an investor. I could remember when they were raising $2 million. right? So when they raised $1.2 million at maybe $5 million valuation or so, I could remember that very vividly. And they were trying to build a Joe model in the US, the Agile Isuzu model. And that's why the name of the company is Isuzu, right? But it wasn't growing, it wasn't thriving. But eventually, as they were doing that, they decided to look deeper inwards into the markets, right? When they were thinking about Agile, they were thinking about, oh, immigrants, Africans that came here, they were used to Agile, Brazilians, Mexicans moving to the US, they were used to Agile in their markets. So let's come here and come and do the same Agile. But then Agile was mostly informal banking. With the advent of banking, Agile has reduced totally. With the advent of credit in markets, Agile is almost gone. Why do people do Agile? Save money and get credit. If the banks can give you that at a low rate, why do you need Agile? So once they realize that, they're like, we're doing the wrong thing. Trying to take what worked in Africa, right, with different infrastructural situation, trying to make it work here, might not work. And they landed on a gold mine, which is they discovered that even in the US, there are poor people who are not getting enough good reporting on their credits, especially for the things that they pay for and have shown that they are reliable people, e.g., their rent. If you pay rent monthly and you don't owe your landlord, especially in the US where rent is paid monthly, then you'll probably, you should get some cool points on your credit score for that. And they got into that space and partnered with large property owners, federal mortgage systems, and before you knew, they grew their revenues crazily, and today they're a unicorn. That's a business that's worth more than $1 billion, right? Built by immigrants, a Nigerian and I think an Indian, I'm not sure of where he's from, right? But he's Asian, Southeast Asian sort of, right? And they build a really great business out of that. That is adaptation. Then the last one is arbitrage. Arbitrage is leveraging benefits of a new location to start existing in more markets. Arbitrage could be, because there's cheap cost of labor in China or in Kenya, expanding to Kenya so you can access that cheaper cost of labor, or because the ports in Kenya are better than the ports in Nigeria, then you expand to Kenya so you can be able to access the ports, or you're doing business more in the US, but since more affordable labor out of Nigeria, developers in Nigeria are cheaper than developers in the US, so you expand to Nigeria so you can get advantage of developers in Nigeria, but then you're selling mostly to customers in the US. Those are different ways to think about. It is not always about taking your product, right, as it is and going to sell in a different market, right? You could do the aggregation method, which is the common one I just mentioned, but it's not all about aggregation. You could adapt and you could also leverage arbitrage. Okay, so moving more to the practical stuff, let's leave the academic stuff out. Hopefully with the academic stuff, I was able to share a couple of examples as well that teaches you exactly how I'm thinking about this in real life. I will just talk about a couple of markets that are popular today. So of course, Kenya first, right? Kenya, a lot of people choose Kenya for good reason, frankly, because they're thinking about, oh, I'm in West Africa, Nigeria is the gateway to West Africa. So I want to go to Kenya so I can be in the gateway to East Africa. But the question I always ask them is, okay, before you start to expand to Kenya to do gateway to East Africa, have you expanded to the West Africa where Nigeria is actually the gateway to West Africa? Have you done Gabon? Have you done Gambia? Why are you overlooking those markets? If there's a good reason, no problem, but be sure that you have a good reason. So that you think of a market as small, but a market as small might mean there's no competition. Might mean they've never experienced your kind of product before. And if you introduce your product, you will actually grow very quickly in that market, right? Those are things to think about, right? Kenya market is also big, but it's not like crazily big as compared to Senegal, right? And you have a country like Congo DRC that is also very big, 100 million people and more, that people don't talk about today. Yes, there's been wars and whatnot there, but it's getting better, right? You got Botswana, you got Namibia, you got really interesting countries in Southern Africa and West Africa that most people don't really spend time thinking about, right? So how do you think about it? But then going forward, Kenya also has better ports. The goods move easily out through Mombasa, which explains why there's a lot of manufacturing into the world out of Kenya as compared to manufacturing to the world out of Nigeria. In terms of manufacturing ethic, because of course the ports have helped, clusters are built around those places, right? And you can get more people to work in manufacturing establishments as compared to, say, in Nigeria. Dubai is another interesting one. Dubai is interesting because everybody's in Dubai, right? Different nationalities all across the world, and everybody, to a large extent, has money, right? So there's money that you can spend, which means you can sell goods to that market. Because it's also very cosmopolitan, meaning people from all over around the world. Whatever you're selling, you probably find a market, people who can adapt to that culture and will want what you're selling. Whether you're selling Nigerian food or Asian food, or you're selling, laundry services or some software, you would always find something. And of course, if you can sell to the government of the United Arab Emirates, oh, great, that's the best. Also, the gateway to Asia. I find Dubai very fascinating personally, because I travel a lot. I've been to 30 countries, and pretty much every year I'm at least in 10, 12, 15 countries, right, on business. From Dubai to Asia, to Europe, to Africa, flights are less than 8 hours, for most flights. So it's like the most convenient place to be if you're going to be flying around or you're doing global business. Of course, there's a tax benefit in Dubai, right? Dubai doesn't have any corporate tax. That's also a great reason why people would establish in Dubai. And for specific sectors like fintech, Dubai has a very, very friendly fintech regulation system, also very friendly to crypto. Yeah, Dubai is one place where you can buy almost anything with crypto. Also great for those who are like looking at those spaces. So it's a great HQ location, also respected globally. They've got a stock exchange that is also doing so well now. They had like a really big year last year from their stock exchange as well. So if you're thinking of listing somewhere, you're not thinking of London, you're not thinking of New York Stock Exchange or Nasdaq, Dubai also has a great burgeoning and emerging global stock exchange. And of course, there's a lot of people with money there that could buy into such stocks. US also is another interesting market. Of course, for one reason, it's the largest market in the world. Everybody wants to come to the US, whether China, Nigeria, London, New York Stock Exchange, biggest stock markets in the world, right? Most of the biggest businesses in the world that have $1 trillion of value are listed on this stock exchange. So it's like the holy grail of stock exchanges, right? Very deep market, people have money, people have credit, real estate market, big. Every market is in hundreds of billions of dollars, if not trillions of dollars. It's amazing. And of course, the whole world trades in US dollars, right? So global access as well. For example, if one is a citizen of the US, right, almost global access, that respect is there, even though, of course, you can get that from Canada, from the UK, from Japan. If you're a citizen of Tokyo, you can travel to almost the same countries, even if not more than being a citizen of US. But from a Nigerian perspective, we think US is closer to get the citizenship than Portugal or Japan. That might be true, but your mileage might vary. For some people, they find those other ones easier, right? I've seen people back in the day when I would tell them, "Oh, the company is a Delaware business. Come and invest." They're like, "Why are you not registered in Mauritius? Why do you think I would prefer a US company?" And that's when I realized that America is not everything, even though America is a big place to be. Delaware also is one state in the US where most people register companies, especially startups. That's because venture capitalists out of Silicon Valley and almost all of the US prefer companies registered in Delaware because of the simplistic laws and the way the courts run in Delaware, right? So most startups you see today are registered in Delaware. It's a small city close to New York, but that has most companies in the world, right? Like in terms of number of companies registered in Delaware, they're in the millions, even though it's a small city, and all the people that are registered there don't actually even live there or have never been there. I have probably 40, 50 companies in my portfolio that are registered in Delaware, and I've never been to Delaware. My own company is also registered in Delaware. I've never been there. So that's interesting to note as well. Also, thank you very much for those who are bringing in questions. I can see questions coming in, and I'll start to address them one by one. It will be remiss. I'll be remiss if I finish this talk without talking about AI, right? And the reason why I'm talking about AI is because it's a new trend, and it's one of those things where it's a wave where the first winners come in and they take the spoils of the markets. And thankfully, it's global, right? Today, I see a lot of founders in Nigeria ask, "Are you building AI?" Everybody's still like on the fintech drug, right? I don't see enough people building AI. I've seen fantastic Nigerians release AI models that a lot of people could latch on and build really fast, create a great consumer products on, but nobody is building on it. It's surprising to me, very surprising to me. And that brings also the knowledge barrier. AI is global. AI brings an opportunity to not have to beg a VC or to have to like, oh, you win in Nigeria first before you expand. You can win in 2 weeks if you build something great, right? And you can win globally, almost from day zero. We've seen companies building millions of dollars in revenue on AI with no VC money because it can just be a small consumer tool that has 10,000 customers that are paying $20 per month easily, right? You know, thanks to the opportunity that AI presents now. So I always encourage young entrepreneurs, especially those that are very technical. AI presents a new opportunity to build for the world, and even with little money, VC money needed. Before you could build anything tangible, think about the Microsoft and Nvidia of this world. Their first, second rounds, 20-30% of the company has already been taken, right? Then the market in the last few years, got a bit frothy. Entrepreneurs only want to give 10%, 5% away, or companies that are not making any money. But that market has changed again. Investors are now very serious, right? You don't have traction, you don't have revenue, nobody wants to talk to you, right? But yeah, it's changing everything again. You don't even have to give a lot away. You can start making a lot of money from day one, right? And globally again, right? Those are like the really great opportunities and with little money there, and also very little regulatory needed. And you don't need to even travel anywhere. You can do it from anywhere you are, like any city in Nigeria. What is left, what the only issues are your imagination. And you can even use GPT to do a lot of research, to decide what to build on. So it's important that I mention that. Now, let me talk about some do's and don'ts of international expansion. Then I will try and answer some of the questions that have been asked already. So in terms of do's and don'ts, don't raise funds to go into unfamiliar markets. From time to time, I talk to founders who are saying, "Oh, I want to expand in the to Africa, across Africa. So I'm raising money to expand across Africa." I say, which of these countries? Which one have you been there before? They were like, "Oh, you don't have to have my interest in those countries. Some of these countries are very difficult to expand into. Some of them, they are employed. The people there don't have good work ethic to support what you are trying to do. They don't have the same ambition as they just want to earn a salary, go to work and chill, right? You have to be aware of this market. It's better to go in an opportunistic way with a partner or with channel partners, right? Than just go blindly, especially if it's not a large market. It's okay to go blindly and go to China, go to US, or come to Nigeria. Those are large markets that you can explore and and figure things out. But even at that, go with no, don't go and start immediately. Just go there, explore, get a personal view of the market before you start thinking about expanding in that market. Then don't overspend in new markets. I just talked about that. Don't ignore your data, especially if you are building software. You can see the countries where you're already getting some traction, right? Without you even going there. Then go to those countries and go and see what's happening. Then don't lose your existing markets. Though there are scenarios where, sorry about that. There are scenarios where it's okay to let go of your existing markets, but it's very rare. A scenario could be like maybe you are struggling with Nigeria and they had an opportunity to start getting customers at scale in the US. Then it's okay to leave Nigeria entirely and go into that new market. What are the do's? When you go into a new market, attend industry events, connect very quickly with people, try and understand what's happening, right? And then use advisors to fast track your learning. Don't try and do everything yourself. Ask questions. Those who spend time in those markets, talk to them, book meetings, right? Chat with them, try and understand what they faced and what they won't do and what they will do different. Then test waters with channel partners before you go and incorporate, and start stressing yourself with regulatory in a new market. So moving on to questions. The first question from Tunji, what's the one thing you wish you knew earlier about international expansion that could have saved time and resources? Number one, the fact that you need to work with channel partners, right? Sometimes doing sales in a new country can be very difficult. Understanding how to expand, how to sell in a new country can be very difficult. But if you talk to someone who's on the ground there and figure out the revenue share type of play initially, then you probably might be better off. Or a co-founder as well could also be another way of solving those kind of problems. I know a company where There was a Nigerian who was trying to build in Kenya, and the Kenyan was trying to build in Nigeria, and they were both struggling with medium level of success. And then they met each other, and they were like, "Oh, let's do a company together." Eventually, the Nigerian ended up coming to Nigeria. The Kenyan ended up staying in Kenya, and they were both running the same company with double HQs. And the company eventually grew really large. Today, the company is $26 million in annual revenue, right? Magic. One of the few successes of seeing the Nigerian and the Kenyan co-founding a company together, but massive success story. Even though there are some commas in that story, but at least let's leave it at that. It's still a massive success story. So that's one thing I wish I knew earlier. Another question from Joy. Do investors look at startups differently when they have global expansion plans? What should founders keep in mind when pitching for international growth funding? I think I talked about that earlier. International growth funding is something that a lot of investors like hearing, unfortunately, even though that's not how to think about things, right? They like hearing it because it gives you a good explanation for what are you going to use the extra millions of dollars to do instead of spending it on Nigeria. Frankly, if any investor is ready to give you money because you claim you want to expand to a country that you have never been to, that you don't understand how it works, take the money. I won't blame you. Take the money. It's the fault of the investor for falling into that trap of a sweet story that might not necessarily turn out to be true. Right? Take the money. But the best founders really understand the new market. Antonia is surprised. Yes. You take the money and then figure out how to best use it in your local market today, or now go and test the waters with just a small amount of money so that you don't go and lose all the money all at once. Don't go into a country you've never been before and then start establishing head office, start spending money on advertising, latest bride in town and whatnot, right? It does not work that way. And yes, the investors look at you differently. Yes, that's true, they do, right? But the best investors are also discerning. They don't want to hear you just say Kenya, Ghana, Egypt, which is what every founder tells me, right? They want to hear why Kenya. The why is more important than you just telling me what every other person has told me. Why UK? Because you want to jump out to UK, or because UK is actually the best market for you as compared to Ireland, right? We want to understand that bit. I want to see that you've really done worked, in a way you've spent time thinking about this, or you talk to people and you understand, or maybe you're out of opportunistic markets. For example, for me today, the country where I make the most money from outside of Nigeria and the US is Cape Verde, which is very, very weird. Most people have never been to Cape Verde before. It's a country of 500,000 people, right? And you will never hear that from any founder, like the expand to Cape Verde. I've also expanded my companies to Kenya, to Ghana with very limited success in the past, So it's like, what is your unique insight? The best investors want to really hear your unique insight as to what your global expansion looks like. Oh, is my data that is telling me that they want to see that data? That's that. What funding options are available for startups looking to expand globally beyond traditional VC funding? Private equity funding is one. The other one is even there are countries where they are actually hoping that you will come into their country and come and expand, and are very happy to support you with debt, with grants and whatnot. United Arab Emirates is one. Canada has done a lot of that too as well, attracting entrepreneurs and funding entrepreneurs. And you find that happening with Australia and also in Europe. From time to time, you see different countries, even Rwanda, right? Even in the US, you find states like Indiana, states like Oklahoma, right, inviting people and paying people to move into their states. So those kind of options do exist, and you can do more research to learn more. Thankfully, ChatGPT and all the other tools can do a lot of deep research around these kind of spaces today. But it's not just VC. In fact, for me, one of the things that surprised me in the world is lately I've seen a lot of people that are like against VC funding, and even they raise money before. They're like, oh, you can raise this money from debt easily. You can get $1 million from the bank. Just go ahead. Don't forget about VC money. Oh, you can talk to friends and family. Let's put this money together for you and start listening. Forget about VC money, right? So there's a lot of money out there aside from VC money. VC money is shiny. It's nice to be in TechCrunch, TechPoint, but VC money is only meant for companies that are going to grow astronomically. I'm a VC. If I want to invest in you, I'm not expecting 10x results. I'm expecting 20x, 30x on your deal, so that across my portfolio, if only your company succeeds, I can get a 3x, right? So if you're not ready to grow that fast, or you're not building technology that will go that fast, don't come to meet me for VC. You're wasting my time, you're wasting your time. That's what people don't think about VC money. They think VC money is for just any kind of company. A lot of companies that are lifestyle businesses will feed you and for your family, but it's not going to go to $100 million businesses. VCs are really not interested in that. How important are strategic partnerships when entering a new market? And when entering a new market, what's the best way for startups to form meaningful connections abroad? Networking. You just have to get better at your networking. Talk to people, meet people, share what you do, share your passion, and grow those relationships over time. Some countries it's easy to make friends. Some countries or some states, people are very distrustful and it takes time for you to make friends with them. But once you become their friend, they will not talk to anybody else. You are the person from Nigeria, and they will do all business there is to be done with you. Right. So both so there's those differences in markets, and there's also of course pros and cons. Countries where it's very easy to make friends, it doesn't mean you are really their friend because they make friends with everybody. The ones where it's hard sometimes, once you become their friend, they trust you with everything, and you're the only person they want to. You're like the ambassador of Nigeria as far as they are concerned. Right. So that's that. What are biggest regulatory challenges startups face when expanding globally, and how can one navigate them? I don't know how to answer that question because until you go to that country, you're going to know. That's when you know. But that's one of the biggest knowledge barriers. Don't think about those regulations until you know them. Don't create problems in your head until you actually see those problems, right? It's you've been too much, having too much risk, and thinking about too much risk even before you know whether there's risk in those countries or not. So that's something you should not do, right? I've heard people talk about regulatory challenges. Regulatory challenges, yes, can kill a company, but rarely does it kill a company. Lack of movement can actually kill a company than regulatory challenges. Selling internationally also means adopting to different business cultures. How can startups maintain their brand and identity while localizing effectively? This can be very difficult, to be honest, which is why at the end of the day, you really just need to, listen to the voice of the customer. Sometimes your brand identity does not matter. If you cannot adapt to the customer, then you probably have no business being in that market. That's the unfortunate piece. It's very difficult to maintain a brand and sell the same thing in each country. And when you think about like Chicken Republic, they now sell jollof rice, they sell egg, they sell things they will not sell in America, in South Africa, in Romania, they sell it in Nigeria, which means they have to adapt instead of maintaining some brand identity that will not work. Sometimes it's your name. The name of your company might mean something else in a country where people will laugh at the name. And then in that country, you have to change the name. Those are realities of adapting to a new market. Yes. How do you recommend startups validate their product market fit in a new country? Channel partners. Spend time with a channel partner, right? Have one or two people buying the product first before expanding fully, and then it's easier to expand. Or see which other company is there. Can you do a merger and acquisition? To get into that country rather than go there directly yourself. Those are different ways you can try out. Can you show up an example of a startup that successfully expanded internationally and the key strategies that made it work? Move will be my best example lately. So Move is a company that started pretty much in Lagos State. Nigerians worked with Lagos State government and worked with Uber to, when Uber was looking for more drivers, and drivers didn't have money to buy cars, they will buy the cars, they will lease it to the drivers, and drivers cannot drive on Uber. Now, Move moved from Nigeria, moved to Dubai, started doing a lot of business in Dubai. From Dubai, they moved to the US. Now they're not, and Uber eventually now invested in them $100 million in Move. Now, Move not only works for Uber in the US, they are now having Waymo, right? The autonomous driving startup, as a customer in the US. And most recently, Move, a Nigerian company founded by Nigerians, bought the largest competitor in Brazil that was making $100 million per annum. They bought the company. Those are Nigerians like you and myself, right? Really super awesome success story, right? What are the key strategies that made it work? Really understanding how to relate with governments, really understanding how to do business at scale, partnerships, right? And riding on the back of large giants like Uber without just going directly and trying to figure out who's going to be my customer in this market. That's what made them work, right? So and look at the market: Nigeria, Dubai, US, right? And you go to a country like Kenya. I think they're also very big in Kenya too as well. Move is very big in Kenya. Let me check on their website. You can go to Move, MOOVE .com. I think it's Move, move.io, move.io, right? And you can see, let me see, today they say they've done 55 million trips from their vehicles. Okay, I've opened the site in terms of countries. There are Egypt, Ghana, Kenya, Nigeria, South Africa, Uganda, India, United Kingdom, United Arab Emirates. Those are the countries where they are. Uh, in fact, they don't even have US here, right? So I mean that means they've not even launched fully in the US. To just still kind of looking at things, or maybe they're trying to work with Waymo in other countries, because I know they're working with Waymo now. Waymo is already on their website, even though I cannot see the US version of their website, right? That's testimony to the Nigerian hustling spirit, right? And understanding markets and moving in those directions, right? And that's what I hope I've inspired someone here to really think about as they think about their business going forward. Thank you very much for listening. I'm happy to spend more time with folks who want to like really talk deeper about okay, how to really look at your data to decide which countries to expand to, or you're thinking about the fintech space and expansion in the fintech space. That's something I'm also super knowledgeable about. And you can follow me on Okweawo on all platforms for more of insights. I do share stuff publicly from time to time. Thank you very much.
Thank you so much, Opeyemi, for that insightful session. It was just insight upon insight. Thank you so much. You did so much justice to the session, and it just
Antonia, we
makes
can hear
me.
you.
Oh, can you hear me now? Hello, can you hear me now? Okay, if you could kindly confirm you can hear me now, that'd be amazing.
Yes.
All right, fantastic. Thank you very much. I was just giving my thanks, Opeyemi, for such an insightful session. You did so much justice to the topic with insights that you shared. It was just practical steps. And to one of your questions, I think you answered. We have some questions that came in, but time would not permit us to address all the questions. So as Opeyemi has said, you can reach out to him on social media. You can also send your message to us, and we'll do well to forward your messages to him, your questions to him, and would look for a way to relay the answers back to you. Yeah, so it's been an amazing guest that has been shared. I think I was going to crown it up with something I heard from somewhere where they said Naija no dey carry last, right? So really in reaching out for global impact, it's Opeyemi emphasized the need for due diligence, do your research. And then my shocker was actually analyze the, don't just be fast to go and start spending cash and all of that. Do your due diligence, analyze the market, understand the scope of the area you're going to. It's 6 o'clock. We have to bring the meeting to a stop, but again, we'll be here next month at the same time, the last Thursday of the month, with another insightful session. If you haven't registered for the MACAC, which is one of the biggest events in Nigeria, kindly go to www.macac.com and register today. That is an opportunity for you to project your solution to the world also. Thank you so much. On behalf of the founder of Eko Innovation Centre, Mr. Victor Gbenga of Alabi, I want to thank again Mr. Opeyemi for taking out this time to be with us. I want to thank our amiable audience. Thank you for making today worthwhile. Really, thank you for your questions, for making it engaging. We appreciate you. And that is all for me today. Thank you. Have a wonderful, wonderful day. Thank you. Bye, everybody.